the ability to act at the right moment, that makes the entire difference for high quality trades. And to guide us through all of this, we have someone who doesn't just teach trading, he spent over 3 decades deeply analyzing market structure and momentum. So let me introduce you to Mr. Rohit Srivastav, who has founded India Charts and Strike Terminal, which is also an analytical tool. And he has also created RMI, that is Rohit Momentum Indicator, which we'll learn today how to use it, and which is also Strike's proprietary tool that you'll only get on Strikes, exclusively on Strike. And this tool has, helped thousands of traders cut through the noise and make cleaner decisions. So now with 30 years in market, he's seen every phase, the scams, the bubbles, the crashes, and even a lot of rallies. He's featured on platforms like CNBC, NDTV, Economic Times, and has built Strike Money to bring advanced yet accessible analytics to Indian traders. Today, Rohit sir will walk you through how RMI works, how to capture early momentum, and how to build a simple yet repeatable systems that bring structure to your entry and exit decisions. So stay tuned. This isn't just any theory. This is an insight straight from his experience. So let's get started. Hello, sir.
Yeah, good evening.
Just a second. I'll also pin you. Yeah. Hello, sir. Hope you're doing well. But before we dive into the masterclass, sir, what is your take on Nifty's bounce this week, especially after that sharp correction that happened?
So it looks like an attempt to move higher, but there are a lot of negative divergences in momentum. We are seeing more movement in mid and small cap indices than we are seeing in Nifty itself. So slightly skeptical of the move right away in the very short term. Okay, medium to longer term, we can have a different view, but very, very short term from a 1 week perspective, I would be prepared for some kind of pullback.
Got it. Sir, I'll let you take over the masterclass.
Sure.
That's
Thank you so much.
Thank you.
So RMI or Rohit Momentum Indicator, as it is popularly known, is now available on the Strike platform for everybody to start using. We also do give selective access to people who join the mentorship program on TradingView. So people who like to use it across securities and segments would have to take access on TradingView through our mentorship programs. Now, I am going to explain to you the importance of this indicator, how it stands out. To put it in very, very short, the RMI or Rohit Momentum Indicator is an improvement to classical momentum indicators that we know of, like the MACD, ROC, etc. It uses some of the knowledge and components in those indicators, but improves upon them significantly. So basically, the idea is that an MACD's biggest critique is that it is slightly behind the curve, which means that it ends up giving signals a few days late. Okay, and another thing with other indicators like the standalone ROC is that it can be very, very erratic. Then with a lot of the volatility indicators is that they are not directional. So we've tried actually to circumvent all those problems and come up with something that is fast, smooth, works across time frames and across securities, and that is what the RMI is. With thousands of users now, we know that the how well it works because of course me and my teams have been using it for decades now, and a lot of our trades calls have always been based on it. It's used, we in fact do a multi time frame setup which we'll try and get into. But of course, you need to understand, get a basic grounding of how to use it. Now, if you've used any momentum indicator in the past, okay, it should be easy for you to, quickly grasp it because, okay, let me just share my screen. So this will make it a little easier. Yeah. So what I was mentioning is that the RMI is faster than the MACD, smoother than noisy indicators like the ROC and ROC and directional, unlike most volatility indicators, which can rise both on a falling or a rising trend. It tends to be directional, works across time frames, and has multi-time frame access. So that way it ends up being pretty beautiful. and has helped us, come up with some very good trades, and many over decades. I've used it for short term, long term, medium term, any time frame. I've used it for all kinds of investment calls as well. And there are a couple of things. So if you've actually used any other momentum indicator in the past, you will find similarities. So it will be easy for you to get started. There are some concepts that I have added to it, especially the concept of the zero line. So this becomes a very important concept that we will get into, which actually tells you which are the good signals and bad signals that you really need to pay attention to. So that's a very important part. And then multi-time frame, because eventually multi-time frame analysis can be used along with the Rohit scanner, but to understand what the purpose of multi-time frame access really means and how you're supposed to understand that. So that's what we will do. Now, like all momentum indicators, so I'm going to take a blank screen so that you actually get an idea. There are momentum indicators which are range bound. Range bound indicators are between 0 and 100. But I actually like a non-range bound indicator. The reason is that this indicator can go anywhere as far as it wants on the upside. So if the trend is up, okay, then it can keep on moving to the upside. So you have an indicator that can keep going up till the trend is up until it turns down, no matter how far. So it doesn't have to, and it can stop early also. But there is no particular level. There is no overbought level at 50 or 100. There's just, yes, a historical basis that at a particular level or at a particular point, we can get to an overbought or oversold condition. But it's not even overbought or oversold. It's simply that we've reached a point where maybe we might think that, okay, this is possibly gone as far as the past. Okay, so if in the past going to a certain level was enough, then going to that same level now also should be enough, right? So that is sort of what it tells you. If this is where it topped out the last time, then maybe in the current cycle it will top out around the same level. But there is no particular defined overbought or oversold level, and that is a big differentiator. So I like that, because then you can freely move in a direction. It will not stop biasing you that, oh, if it's reached 100 and it's overbought. So that doesn't happen, and that is why that's one of the nice things about having a non-range bound indicator that can move up and down. Now, when you have a non-range bound indicator, you always have a central line, which we call as the zero line, which is also there in MACD, also there in ROC, etc. So this central line defines the point at which momentum comes back to zero. Now, it's a very important point because it's also marks the completion of a cycle. Now, what do we mean by a cycle? See, this indicator actually ends up looking very much like a sine curve. Now, anybody who knows a sine curve, it's something that simply moves like this, up and down consistently. Only thing is that instead of just looking at a sine curve, we've put a central line, and I've defined that a cycle is essentially the movement of this indicator, okay, all the way up and then back to zero. Okay. So moment it comes back to zero, which means it comes back to this black line, we say that this particular cycle, which had started to go up, is complete. And then only we can say that a new cycle can start. Now, see, this is a simplistic version in which we are showing that it only moves like this. If you have seen a momentum indicator in the past, you know that it never moves in a straight line. It moves up, it may move up like this, like this, like this, and then come down. Okay. The most important part in this, therefore, in terms of completing a cycle, is coming back to zero, which is coming back here. So it's only when you come back here do we actually say that this bullish cycle, which started where it started somewhere down here, this entire bullish cycle, it didn't end here. It actually ends down here. Now, what is the red line and what is the black line? So every momentum indicator, we often use a moving average. We do that so that we can get signals or we can confirm that the indicator is actually going up. So what is this black line? This black line is a 9-day exponential moving average of the red line. So red line is the indicator itself, the mathematical calculation of momentum. Okay. And then we have a black line, which is going to cross over the red line. What is the importance of this crossover? Every time the black line crosses the red line, okay, so when the red goes above the black, this is a buy signal. Okay, this is your buy signal. And every time the same thing reverses, with a opposite cross happening, which has happened here. This is a sell signal. So this is a basic buy and sell signal. Every time you have a crossover, you get a sell buy or a sell signal, and the crossover is upward where the red goes above the black line. It's buy. When the red goes below the black line, it's a sell. Okay, now this is the basic, but there is always some noise. And what is this noise? The noise is what you're really seeing over here. This, all this is the noise factor where the red is going up and down, but it did not generate a sell. Now I'm going to show you what is the importance of the uh, zero line itself in this decision making. Now, this is what I showed you is a very textbook kind of version of the indicator. In real life, it's not always that simple. So in real life, what ends up happening, you get a buy signal. The indicator goes up here and then it starts whipsawing. Okay, something like this. So then you'll ask me now what to do. In this situation, what do I do? Now the black is the 9-day moving average. Okay, but many times when the red dips here, okay, is this a sell signal? Now, if this down here was a buy signal, then shouldn't this be a sell signal? But then there's another buy signal here, and then there's another sell signal here. There are too many buy and sell signals happening. So how I define it like a sine curve, what I actually say is that this entire movement that we are actually looking at, okay, this entire movement is a bullish cycle going on after the buy signal. We call this one cycle, one bullish cycle, which is going on and it's going on and it's going on till it actually comes back here. In other words, this is the only meaningful buy signal. The others which are happening here, this is the noise. I don't pay attention to this. I don't pay attention to these buy signals which are happening up here before we went below and back above the zero line. Okay. So when you buy over here, the object should be to ride the entire trend, ride all the whipsaws and get out only in the end, somewhere down here. So how do we get out and how do we get in? That comes to the next part. But the main point is that we have to try and ride the entire move. That is the purpose of using the RMI. Now, remember here I'm talking only about buy because everybody or most people have a bullish bias. But your bullish or bearish bias as to whether you should be looking for the importance of buy or importance of sell should come from a higher time frame. So let's presume that this chart we were looking at is a daily chart. If this is a daily chart, my bias as to whether I should look for a bullish or bearish signal can come from one higher time frame. So let's say weekly chart. So the weekly chart determines whether I should give importance to buy signals or sell signals. Once I've decided that weekly chart is bullish, therefore I should give importance to buy signals. Then on the daily chart, all I'm doing is looking for these perfect buy signals that occur after the momentum indicator has completed a cycle like this back to zero. Okay, now let's clear this up and discuss this all over again. Now, see, each time in discussing it, it should get more and more ingrained in your mind as to what the concept is and what I'm really trying to say. Okay, so first I had a zero line. I'm sorry. Okay, so this is a nice little zero line over here. And then I have an RMI indicator, which is going up like this. Let me make it a little thicker. So notice that the most important buy signal is which one? Now, I just mentioned some time back that we will give importance to buy signals that happen after the red line has come back to zero. All the other buy signals which are happening above the zero line are being ignored. So the most important buy signals on this chart, okay, are the ones which are happening down here. Okay, this was an important buy signal. After that, it goes all the way up, comes all the way down. The next important buy signal is here. Okay. So is this a good buy signal or not? Some people are often confused by this idea. Okay. So what is important is that the red line, okay, this red line should actually make its way back to zero. It should touch the zero line. It doesn't matter whether it touched and went down or whether it just touched and then bounced back. In other words, that the buy signal that occurs after the red line has touched the zero line or gone below it is important. So this is a good buy signal. This is a good buy signal. This is also a good buy signal. Even though the crossover is occurring above the zero line, it is good. Why? Because the cycle is complete. The cycle is complete when it comes back to zero. So moment the cycle is complete, the next buy signal is a good one and important. Same as here. It came back to zero and occurred. So whether the occurrence itself is above or zero, above the zero line or below the zero line is not important. The important part is that the red indicator comes back to zero. Okay. And then the subsequent buy signal is what we are really looking at, not the others. Now imagine that the weekly trend was bearish and we actually had a situation where we were looking for a shorting opportunity. Then how would we look at the same thing? Okay, so you still have a zero line and you still have an indicator. Okay, there's just one difference, that now you're looking for exact opposite of what we just saw. What is the exact opposite? You're looking for bearish crossovers. You're looking for this. And then you're looking for this. And then for this, but also for this, which means this was a good sell signal because it is above the zero line. Note now all the sell signals are on the opposite side, but we are only paying attention to these opposite sell signals when the weekly trend or the higher degree trend is down. Now, if you're using a daily and weekly, that's the combination we are talking about. It can be any combination. I could have done hourly and daily, where hourly is what we trade and daily is the trend. Right now, we are discussing daily we trade and weekly is the trend. So the higher time frame is the trend, the lower time frame is the trade. Okay, so the lower time frame chart over here is basically giving me sell signals over here and then over here. Note that here the red line actually went above, touched the zero line and went down. Here the sell signal is occurring below zero. Here it is occurring above zero. Both are okay as long as the red line has completed the bearish cycle. Now, what is a bearish cycle? The bearish cycle is that after it goes down, comes back to touch this. Now, whether it goes above or as in this case, it simply touches it and then goes down again, doesn't matter. The sell signal that happens after it comes back to zero is important. Whether that sell signal has occurred above or below, both are good sell signals. Okay, so now this is on the short side, exact opposite of the long side. Now I'm not giving importance to these bullish buy signals. Why I'm not giving importance? Because on a higher degree, I have decided that the trend is down and I want to go short. Now you'll wonder, but what about these buy signals? So here's the theory, and this is classic investment or trading theory, that if the larger trend is down, should you be doing, or the larger trend is up, should you be doing long, then short, then long, then short? The answer is no. Why? See, sometimes you do get sharp retracements on a sell, but if the larger trend is up, many times it doesn't come down much. It just retraces 23%, 38%, which is very small. And it does that with a lot of zigzag movement. So actually, there's very little return to be made. By the time you figure out that, yeah, it's falling, it's already at the target and then it bounces back. And so you lose money and you don't make money. So in a bullish trend, the real money is made in being long. So you want to be long, exit, long, exit, long, exit. In a bearish trend, you want to be short, exit, short, exit, short, exit. So you don't really want to be trading both sides. Now, some bearish trends are such that you get very sharp bear market rally. So you can argue in a bear market, you want to do long, short, long, short. But in a bullish trend, you definitely don't want to do that. Okay, so once you get yourself focused on that, you're going to trade only this side of the trend. At least you will not miss out on the big moves in the direction of the main trend. That is the important thing. Otherwise, you get caught up in both sides, and then if you miss something, if the counter trend bounce ends up being very small, you miss out on the next sell off. But by paying attention to the signals, you will not miss out. So now you've seen a lot of theory on what the RMI is, how it works. It is non-range bound. It gives importance to the zero line in terms of where the signal occurred and which signal is important. How do you really see these signals? You move over to the strike platform, or if you're using the TV access. And in the strike platform, any chart that you open, any stock or any index, the first thing you'll find is that it actually goes to the chart screen in most cases. And when it goes to the chart screen, you'll find that it is set up on this. You can either go for an interactive chart, which is a completely plain chart if you want to use. But if you go to the Rohit setup, you will find that the RMI indicator is already plotted. Now, if you're on a blank chart, you can also plot the RMI indicator simply by typing RM, and you'll find the indicator there in the search. So once you plot it, you're essentially looking at an indicator where the dotted line here, now see the color coding may be different. Here the color coding is green is the indicator and red is the moving average of the indicator. Okay, not red and black, but green and red. And the dotted line here, this blue dotted line is the zero line. So very simply put, which are the buy signals we are giving importance to? We are saying that this is an important buy signal. Let me just, 1 second. Yeah, this is an important buy signal. This is an important buy signal. So when this happens over here, we say, okay, the trend is up. The trend remains up and then goes into sell over here. Okay. But should we be giving importance to the sell signal or not? Okay, that depends on the larger trend that I have in mind. Okay, in a bearish market, sometimes I would. Now, if I say that this is a bullish market, I would want to be long. Would I give this importance, the sell and the buy? No, I wouldn't give importance to this sell buy. This is the noise. I continue to ride the trend. So the question becomes, how do I continue to ride the trend? Now, there are many different ways you can do it. Some classical, simple analysts will use a trend line to try and ride the trend, but sometimes trend lines can break. Okay, and another thing I like to use is the moving average. So I would actually like to put a good 20-day moving average on top of the chart. That is a nice one. Some people like the 10. I like the 20. Any particular reason? Well, it comes free along with the Bollinger Band. I mean, even moving averages are free. But what I mean to say is that gets auto-plotted. And once I started using Bollinger Bands, I automatically started using 20-day averages. There's nothing, no rocket science to it. But 20-40 moving average is also tested to be some of the most powerful in back testing, giving the best results. So that's a reason they get used. The 20-50 combination is also not bad. Now, what I'm looking at over here is that once this trend signal is in force, next thing is once we go above the 20-day average, we've sort of taken support here on the 20-day average and extend it. So this is one way you can trail. Another one is you can actually trail on the swings. So you can say once, as long as we are making higher tops and higher bottoms, we don't have a reversal. So we don't have a reversal in combination with this sell signal here, which has not completed a cycle, I can actually continue to hold on. So how to hold on is a separate theory, but the important part is which buy signal to give. Because see, there was a buy signal here just 2 days ago on this day. Should I give this buy signal and go and load up on the market? The answer is no. If I missed this buy signal, okay, then I wait for the next good buy signal like this one. If I miss this signal, I wait for this one. So it's either here or it's here. But I can't go up and buy over here, right? I can't go and buy over here. You can't do that. Even if it's going to go higher. That's no way to trade, right? There's no way to, chad jao, that is not the way. So don't chase a market. You actually want to get into it at the early stage of a trend and then ride it. That's the main point I'm trying to make. Then how you ride it, you can have many different ways and tools to actually ride a trend. So what I was trying to tell you is that when there is noise, okay, like what we see here, see, it actually came back to zero. When you see all of these signals, okay, those are not the important buy signals. This is the only one which is important. And this is the next one which is important. So this one was important in terms of getting in somewhere here to ride this move. This one was important to getting in somewhere here to ride this move. Everything else is the noise. So we don't really buy on this. Now you may say, oh, what if I miss this? Well, that's your job. Your job is to be there every day and not miss those signals. So if you missed, you can't live on FOMO. You simply have to have the patience to wait for the next cycle, which means going on a holiday and coming back sometimes. Depending on the time frame, this is of course a daily chart. I'm being a little rough because I find that as a classical problem of traders. They just have to participate every day. Now, if you're doing the same thing on an hourly chart, of course, the time frame is shorter and you can move, you'll get many more opportunities in terms of signals. But the first time you're doing this, I would ideally suggest that you practice it on a daily chart, get used to these ideas, and then only move over to any smaller time frame. So initially, you should use the combination of maybe daily, weekly, or weekly, monthly, and get used to this and then look at it. But like I said, the good signals are the ones where you get a good entry point and then you try to ride the rest of the trend on the way up, keeping a reversal level in mind, whether it's a trend line average or something, or the previous swing, and only exit at the end of that. Then look for the next good entry. That is the job that we are really trying to do. Now, this does not mean you will not get any bad signals. There could be some buy signals that fail, okay, but the ones you get onto and the ones you're able to ride is where the big gains will actually happen. So in the end, the game of investing or trading is really not about being right 100% of the time. But if you can get to 60% in the short term or 70% in the medium to longer term, you're pretty brilliant, right? And to do that, there's a lot of human effort involved. Some of the things I've told you cannot easily be programmed, which is why it has to still be done manually, visually, and that's where charts play a very, very important role. So these are the important signals. Now, if I'm doing multi-time frame access, I would have to switch and check on the higher time frame what exactly is it that I'm looking at. Okay, so if I'm really looking at a weekly time frame, then first thing I'm doing is I'm saying, okay, on the weekly chart, we've turned bullish over here. Okay, so that's an important turning point somewhere here. And then I will look for the next buy signal after that, right? So when did this happen? This happened around here, the 17th of March. So if I looked at the weekly chart buy signal on the 17th of March, then moved on to the daily chart, right, which is the next buy signal after the 17th of March. Now, 17th of March is here. The daily buy signal has already happened. Naturally, when the weekly is a higher time frame, it will come after a lag, so you'll miss the first move. But here, it actually fell to a new low. Doesn't always happen. And then you actually got a buy signal here on the daily chart. So when we actually get this daily chart buy signal, where the weekly is already in buy mode, is where the importance is. So this becomes an important buy signal, which then you attempt to ride as long as you can. Okay. Now, this was a very fast moving market. You can find that some of the signal like this one may appear to happen after some time. But in many other cases, like here, it happens way, way early and much faster than you will see on an MACD or any other indicator. So in that sense, it helps if you combine for those who are very short-term traders and you go into an hourly chart, you will find that it comes even more sooner. And you can actually go to an hourly chart and see multiple signals that are occurring at times much faster than you'd really think. So the next catch becomes that, okay, I understood how to use this indicator on the Nifty, but I don't only trade Nifty, I trade stocks. Does it work differently on stocks? Answer is no. It works in the same way, same logic, same type of setups you're searching for. But there are hundreds of stocks, and if there is a buy signal today on one stock and then I missed it, and then what do I do? And that is the beauty of something that we call as the Rohit scanner. So the Rohit scanner or the RMI scanner, okay, is essentially meant to find buy and sell signals that are occurring in different stocks or different indices at points of time. So this is the most interesting part, because now once you've understood what the signals you're looking for, okay, you also understood that you're looking for multi-time frame signals. Imagine that, and you're looking for stocks now. You forget the index. I don't trade only index. I want stocks to buy. I'm a delivery investor. I want to buy it on the monthly chart, whatever. I can actually scan a setup over here, an exact setup, okay, like the ones we discussed, and find it on the chart. So for example, we were talking about weekly to daily. I was saying that on the weekly chart, a stock is in buy mode. Now I've just done a filtration. Okay, we've chosen a basket. So there are multiple baskets you can choose. Now I've said indices. Okay, so I've not gone to stocks yet. I've chosen live mode. There are two modes over here. One is the live mode and one is the last candle close. Now, why we have two modes is the last candle close means that if you're doing this work in the morning, say, and you're looking at a daily chart at 11 in the morning, would you want to look at the buy signals that may come today on current market price because the day is not over, or which already came yesterday because yesterday's closing prices are available? So based on yesterday's closing prices, you have confirmed buy or sell signals. Now, do you want to know the confirmed buy or sell signals as of yesterday? Then you choose last candle close. Okay. And then once I said that on weekly, I want those which are in buy mode. On daily, I want to know those which are giving me new confirmed buy signals. So it's called new buy. Now, these are the buy signals that occurred on the previous day. Okay, on the closing. And if you click on it, it will automatically open the daily chart of that in front of you and show you. Remember, we saw Nifty, we saw this buy signal occurring on Nifty on Thursday. Okay, not on Friday, Thursday. And this is Friday's data. So therefore, it automatically is presuming that Thursday is the last candle and Friday is the live candle. It doesn't think that Friday is over and the market is closed. It's just working like this. So because we are of course talking on a Saturday. So this buy signal occurred on Thursday, which is the last candle, previous candle to the current latest one. And that is where you're seeing the Nifty buy signal here. So if you click on daily, you'll see the daily chart. If you click on weekly, you'll see the weekly chart come up on the right hand side. And similarly, if you click on the monthly, you will see the monthly chart come up on the right hand side. Okay, it's taking a while, but usually it's pretty instant here. So it will pretty quickly move from one time frame to the other. And you can see, so for even for any index, like I want to say, okay, Nifty 100, I want to see the daily chart, I want to see the weekly chart, or I want to see the monthly chart. I can actually look at it. The standard setup that it comes with here, which you can change by adding indicators or even saving a template if you want your own indicators on it. I usually have the Bollinger Band, which comes with the 20-day and the 40-day on my charts along with RMI. That is what we call as the Rohit setup. So the Rohit trade setup is automatically, taken as default. You can always add or remove indicators by, clicking on FX and adding your own indicators or choosing what you want. And you can then save that as a template and use it later. So if you want your own template, or you can create a custom template here. So I've created my own template also as Rohit setup. This is not there on everyone's screen. I've saved it by using save. And so every time on a chart, I don't find my template, I click on this. You can have your own template and click on it. And then you can switch time frames and see the chart. So the advantage here is that very quickly out of all the indices, there are almost 50 to 100 indices. I have found out those which are giving me buy signals on Thursday. Now, if I want to know on Friday, then I go into live mode. Live mode meaning Friday pe kaun sa buy signals hai. So I got three over here. I click on the daily chart, right? This is what happened on Friday, not on Thursday. CNX consumer, healthcare index, okay, or the pharma index. It just gave a buy crossover here. I hope you've understood that green going above the red here is the buy crossover. Red is the exponential moving average of the green. Green is the RMI or the Rohit momentum indicator. Okay. And it's a momentum indicator, which means speed of the market rising or falling. And the crossovers are buy sell signals. And here we are looking at a bullish crossover after it touched zero. Now we have not so far created a filtration for the touch zero point. So that is a visual aid. We do plan to introduce that in future updates of the platform itself, which will keep coming. So the strike terminal keeps updating its versions, and each version we try to bring in those, and we will bring in the zero filtration as well in some of the scanners. But at least here you're getting the buy sell signal. So that is a huge scan done out of more than 50, 80 indices. You're down to three. So you've reduced your work. All you need to do is check which ones have the correct setup in terms of zero line, etc. And then which one has a good risk reward, which is close to a stop loss or a support. So like this is just close to the 20 DMA. So if I take that as a stop loss or support and then say, okay, where do I have a target? I could draw a channel. So that of course brings in your additional knowledge. But what the RMI does, it gives you the signal. It gives you the entry point, the signal, and then you need to look at the risk reward to set up your trade. The ideal risk reward I found is 1:2. Okay, you can go for 1:3, 4, etc. But 1:2 is the minimum at which I start. Okay, anything less I don't consider. So I should have a 1:2 risk reward to take the trade. Okay, but what I have done is reduce the amount of work I need to do by filtration. And I can do this filtration not just in indices, I can do it in stocks. So I've chosen a basket of indices. I can also choose a basket of stocks. I can say out of Nifty 50, find me the answer. If you say no, I want to find it out of Nifty 500, find me the answer. And if you want multiple baskets, see, I checked on both Nifty 50 and 500. It will combine the two baskets and show you the result. You can even use your own market watches. Note here I've put 40 email list, which is nothing but stocks that are above the 40-week average. I have created a list of my own, which was done some time back. So it's not the latest data, but basically it's a watch list. Now, where do you create your own custom watch list? You go to the home page, go to the watch list, and you create a watch list. So if you have created a custom watch list of your own portfolio, and now you want to scan buy and sell signals on that portfolio, you can do that. Okay, even if you scan something on one time frame and then you want to apply it to another, you can save any of these as a watch list by clicking this bookmark. You can save the stocks that are in this list by saying select all. Okay, so you'll have to do a select all like this. I've selected all of them which are in this scanner, and I can add it to a watch list. And then I can scan that list with another scanner. So I can have overlays of scanning as well. But the main thing we are trying to scan today and learn is how to use this. So I showed you a combination of weekly, daily. If you want to do the same thing on a lower time frame, so you are an intraday trader, okay, then you will say, okay, for intraday, or intraday meaning I have around 4-5 hours of a trade. Okay, so I want to hold a trade for 4 to 5 hours, or maybe for a 2-3 day time period, as long as the cycle lasts on an hourly chart. So I want to execute on the hourly, but I want signals on the daily. So on the daily, I look for buy. Of course, I'm looking for bullish signals right now. I'm not looking for bearish. And then I say new buy on the hourly. I have only 3 new buys on the hourly. So I can now study these 3 charts across time frames. I can click on the hourly, then I can click on the daily, and I can actually study the chart, see whether it makes sense as a trade, and then take a trade on it on the hourly chart. Now notice on the hourly chart here, the buy is coming above zero line. So is this a good trade setup? Based on what we just learned, the answer is no. Then I go to the next one. Is that coming from the zero line? The answer is yes. Okay. And then if the third one coming from the zero line, now of course you need to further study risk, reward, etc. This one is just coming. It's closer to the bottom. In fact, some people may even say it's closer to, and I'm just judging by looking because it's a visual art, that it might be at 61. And it is. So visually we come to know, because markets, when they do wave 1, wave 2, they often stop at 61. I just saw visually, I thought it must be 61. It is, and I'm getting a bullish crossover. Why will I not consider a stop loss on a closing below 61 on an hourly chart? And then I can, set up a target based on the channel. So I can actually have something like this. I can say, okay, what if it goes up here? So now I have a risk and reward, okay, which fits my 1:2 thesis. And then I can use this. And then I need to trail my stop loss. That is the last important part. I have a stop loss, and as you go into profit, you trail it till you get out. And you ignore the whipsaws. So you ignore the bad signals that happen like this in that trade when it is going on. So this is the whole process with which you actually use the RMI. So I've gone into much more detail than we usually do, so that you're actually able to use it fully. You may have many other methods of your own to trailing stops or setting targets, etc. But the important part is that you use the RMI correctly, which means the good buy signals or the good sell signals, and multi-time frame usage, so that you decide that you want to be bullish or bearish. These are very, very important decisions. You just can't keep turning bullish to bearish to bullish all the time. In a rising trend, you only want to take the bullish trades and the ones that come from below the zero line or after touching the zero line. So that part is more important, knowing how to use the RMI. And then once you know how to use the RMI, all you're doing is scanning and looking at whether it fits that setup or not. And you choose the time frame. So how do you choose time frame? If your time frame is a couple of hours to days, you do daily, hourly. Okay. Right now we haven't introduced 15-minute on the scan, but if you went that low, then and you can use RMI on 15-minute, but you'll have to go to a different chart. Like you'll have to go to the Nifty chart directly and switch the time frame to a lower time frame. So if you do that, then you can actually do intraday trading. Now, if you are a positional trader, you hold for a couple of weeks, you can do weekly to daily. If you're a slightly more longer term trader, like 6 months, 8 months, then you would do a monthly weekly combination. In fact, that can even go on for a year sometimes, because monthly cycles don't end that soon, monthly, weekly cycles. But weekly, because we are doing monthly with weekly, the monthly may remain in buy, but weekly will give you many buy sell crossover. So the trade may not last beyond a couple of months. So that is a choice of time frame. So now you're doing three things. You're choosing the time frame, you're filtering the stock you want, and then you're looking at whether the good and bad buy sell signals. And then you're looking at risk reward, execution. Okay, so that is the multiple layers that will actually get you to the successful trade. You may think it's a bit of work, but we've simplified the work here by simply making it click and go as far as the scanning is concerned. So yeah, so that's it for me for today's presentation. What we'll really do now is take any Q&A questions that people might have on whatever they've learned today, so that they can go right back and start applying it on an everyday basis. So we'll be open to questions.
Whoever has the questions, please raise the hand and we'll unmute you and we can take one by one all the questions. Thank you.
In the comments, I see a couple of them. Can the new buy be above zero line? I've answered that yes, as long as the RMI has touched zero before it does that. Do divergences and trend lines work with RMI? Absolutely, they do. So you can, but I prefer divergences. Trend lines, I know we draw it on RSI. It may not come off so well on RMI. You may find many whipsaws because the RMI just keeps moving, like a sine wave, and therefore every time it's curving, you might not get a very good fit, but you can try it out. I mean, if you do get a fit, yes, you can use a trend line. Now, if you read Martin Pring, he uses trend lines on the momentum indicator and price in combination to get a confirmation for trend reversal. So that is also a technique. If you get multiple lows along a trend line, but I mostly look at divergences and the cycle. Or so I don't use trend line so much on the indicator as on price. But like I said, if you go by Martin Pring's work on momentum, he uses it on both. What is the best use case to use RMI and then RRG concurrently? See, it will end up mixing things up because RRG is a standalone tool which has already got its own momentum indicator inside it. See, remember, RRG is an X and Y scale. It uses relative strength, which is, and relative momentum, right? It uses two different things on the X and Y axis. So when you're doing relative strength and relative momentum, one on X, one on Y, you've already taken care of momentum. Now, if you add to that an additional RMI, you will be, mixing up my RMI with his momentum reading, and that will create noise. So if you're using the momentum readings of RRG, then I don't think you should mix it up with RMI. Better to introduce 4-hour time frame. Yeah, sure. That we can do. It may be already there. I have not. I mean, we have the option because it's the trading view backend, but it's up to you to choose which time frame you use. Now on the scanner itself, you will not find the 4-hour time frame, but if you go to an individual chart, okay, like if you open Nifty on charts, you will find the option to switch between multiple time frames. So that completely depends on what time frame you want to use. I just did it right now. The 4-hour time frame is there under chart. So any stock chart, if you open, you will find the 4-hour time frame, but not under the scanner itself. We'll see if that can be introduced. See, everybody has a different requirement. If I introduce, like right now, we have 4 columns: hourly, daily, weekly, monthly. If we add more, then we'll have to remove something. So we'll have to have a shifting that if you choose 4 hourly, then the monthly will not be visible on the screen. Something like that. Maybe we can try and work on it at a later stage, but will take some time. So don't expect it to get introduced immediately.
Rohit, good evening. Suri Sharma here.
Yeah.
It's a pleasure hearing you. I think been in the market for 30 years, and the way I've been working with your indicator for the last 2 months, I mean, it's amazing. Thank you so much for bringing this out.
Really.
A couple of
Thank you.
things that I want to understand from you a little deeper, because One is that when you get buy signals with let's say I typically work on an hourly daily combination. Okay,
Hmm.
so now let's say the trend sometimes you find that the signal in the hourly comes a little early and the daily comes a little late, a day or two later. So by the time if you wait for the higher time frame confirmation, you have already lost 2 or 3 days in the hourly and the lower time frame. I would want you to highlight how to. I mean, would you still suggest that wait for the higher time frame to come, even and forego the early indication on the hourly, because that would be a better way to go. That is one thing. Second is in correlation to the price action. If it's slightly hovering below the 20-day, okay, and and it is still not above what you have confirmation on both, let's say the daily and the hourly. How would you position the trade?
So when we use a moving average, it has to be on closing basis. So whether it's daily closing basis or hourly closing basis. Okay, so there has to be a closing. So intra-day or intra-period, let's say, if it is below that
Sure.
average, that does not count. That is the point where it is testing your mental ability to sit quiet. But
Okay.
the actionability is only at the end of period. So for example, a lot of my trades happen only between 3:15 and 3:30, because if I'm using the daily time frame, only at that time will I know whether the average is being crossed or not, or whether the buy signal, which is in live mode, is actually confirming or not.
Okay. Okay.
Okay, so end of time period becomes important in that aspect. Now, between looking for early and late signal between daily and hourly, uh, what is required is basically to have the trend. So the daily signal, okay, once it becomes bullish, it's not going to turn bearish again for the next you know month or so, right? It may take a month for the entire cycle to complete. Now,
Sure.
between that next 1 month, there will be multiple hourly cycles of buy, sell, buy, sell, buy, sell. So
Sure.
it's only the first one, the one you're talking about, that will get missed is the first one. But if I try to time the first one with the hourly first, it's possible that the I'll buy on the hourly and the daily never confirms, and
Sure.
it was a wrong indication, or I was preempting that no, the day will give a buy. So there's no way I can know for sure that the day will give a buy and buy on the hourly. That is why that's a trade I will have to miss.
Okay.
Oh,
Okay.
no. Now I can say that okay, I can try and catch that low on Elliott wave or some other way. But that is where then we go to the next skill set, which is position sizing. Position sizing is a additional skill set where I'll say no, I'll not buy my entire 1,000 quantity. I'll buy 200, 200, 200. So if I get some other confirmation that a bottom is formed, which is not RMI, and I can allocate a 20% position to that, then I can wait for the daily RMI and allocate 20% to that. That is a
Okay.
different way of dealing with the whole idea that I want to catch the bottom, because that is a human tendency that I want to not miss the bottom trade. But if
Sure.
I'm just using two time frame analysis of RMI, I will typically miss the bottom trade. I will only
Okay.
start after that.
Okay. Thanks, Rohit. Thanks so much.
Uh, so, sir, Tushar has asked in the comments chat, when or how we know buy signal uh, above zero is the next buy. It could be false also.
So
If,
you are not going to be
yeah,
right
sir.
100% of the time. So first thing is prepare for being wrong 30% of the time. Then look for the good buy signals. Some of them are going to be wrong.
The next question is by Krishnan. In an hourly daily setup, scanner being in buy in weekly and monthly, does it add to the strength?
I didn't get the question.
Uh, Krishnan, can you just unmute yourself? You can ask it directly.
Because what I understood is you're talking of hourly and daily, and then you're talking of monthly. So then I'm actually ending up mixing four time frames, which can be quite complex, especially if you're doing it the first time. Now, if I'm an investor, I do end up looking at multiple time frames. If I'm an active trader, also I can end up looking at multiple time frames. But ideally, the trade is between the two time frames that are where I'm going to trade and the one I'm going to take a view on. Okay, so say the monthly is in sell, but the daily is in buy, and on the hourly I get a new buy signal. Should I give that hourly signal importance? The answer is still yes, because the daily signal will still last out for a couple of days or weeks. So the monthly really doesn't play much of a role in the daily hourly setup.
We have Kiran, sir. I'll just unmute Kiran. Yeah, Kiran, you can ask the question. Hello. We have another question by Prabhu. I'll just unmute Prabhu as well.
Hello, am I audible?
Yes.
Yeah.
The two things which I wanted clarification on. One thing is if I'm using MACD and RSI or whatever other indicators, how better is RMI compared to those? Or I need to add on to them. Will it be an add-on to
So
them?
no. So if you're using the RMI, get rid of the MACD, because the MACD is very different, and also that the signals are usually 2 days after the RMI. You can check it. If you plot RMI, you'll find that RMI gave a buy signal today. MACD will give it after 3 days. So it's that 2-3 days sooner is what we are trying to do. So that is the one aspect. RSI is a slightly different indicator. I still use RSI. RSI is useful because it sometimes gives you points where you've gone too far if the reading is very high, or it gives you negative or positive divergences at the end of a trend, which are useful in telling you that you need to tighten your stop loss or start looking for an exit point. But RSI is not used for the entry. So the entry again has to come from the RMI itself.
Okay. Second point is I'm basically into intraday trading on Nifty. So is it how can I use RMI for intraday Nifty trading?
You can, but the time frame you'll have to choose will be very different. Daily, hourly will not work because hourly signals last for a couple of hours, and intraday
Can
trade
you
sometimes.
is it
Yeah,
possible for you to show that now?
yeah. So see, if I switch to an hourly chart, in fact, I'll have to go to maybe even a lower time frame chart. 1 second. Oh, where is it gone? So see, it's possibly you'll end up using something like 15 minutes. I'm just giving an example. Okay. So if I'm using 15 minutes, then and I need the trade setup. So I'll put this on. Okay. So on a 15-minute chart, even for a Nifty, let us put Nifty only. Okay, so here I'm looking at a 15-minute chart. What would end up happening here? Okay, now if I'm using 15-minute, the question is also what higher time frame will I use? Will I use an hourly? We'll have to try that out. But essentially, the methodology is the same. This is the important buy signal happening here from below the zero line. Another one is happening here. Okay. And those are the ones that I will give importance. So this one is somewhere here. This one is somewhere here. Then there are multiple here. So there's a secondary entry. Say, for example, if I did put a stop loss here and it got hit, I would have to enter again on these buy signals. So definitely every trade is, like I said, every trade, but you have to get more winning trades. So you have to stay in the system. Uh, this one should have worked. And now you have one here also. But this is of course over because the day is over. Now, if you're intraday trading, you wouldn't usually roll over. But this is sort of the idea. So when you have a fast move, you will find like this one here. Okay, when you're moving fast, you'll have multiple signals. So the real question arises: how you going to gauge your risk reward at that point of time? So you have a signal here, here, here. Now this is sort of trending. See, it's not coming down to zero. These are sometimes the very long trades you can end up with. So if you made an entry here and you're actually trailing with the average or some trend line, you end up holding for this entire move, at least till the day is over, if nothing else. Now, this may end up appearing it's going for a couple of days. So in that scenario, once you're out because you're saying that it's an intraday trade. It will not go beyond the 20th. Or if it started here on the 18th, it will not go into the 19th. It's probably over out here. Now, some people may even want to go to a 5-minute. So you have to build comfort. I know people who do it. The reason you will find me slightly hesitant right now is the truth, which is I never do intraday trading. Okay. But I know people who are using RMI happily at the lower time frame levels. In combination, of course. So they're combining. It's not that they're using it standalone on a single time frame. It is again a combination, maybe of 5 and 15, for example, 5-minute, 15-minute, or 5 and 30. So you'll have to work those combinations out, what really suits. But I would always say use two time frame combination. That would be helpful. Yeah. Next question.
We have Deepak who's raised the hand. I'll unmute.
गुड इवनिंग सर इज द एक्सेलेंट सेशन अभी मेरे को लॉन्ग टर्म इन्वेस्टिंग में इसको यूज करना है मंथली एंड वीकली और इसके साथ मेरे को जो वैल्यूएशन सेटअप है पीई और मार्केट वैल्यूएशन है उसको कैसे मैं यूज कर सकता हूँ उसको व्हाट इज द आइडियल वे टू यूज फॉर द लॉन्ग टर्म इन्वेस्टमेंट आई शुड यूज ओनली द मंथली वीकली और मेरे को फंडामेंटल में जाके उसको साथ में भी एलोबरेट करना चाहिए व्हाट शुड बी द आइडियल थिंग
The short answer is the more the merrier, because if you marry it with fundamentals, because especially if you are considering a stock, you want to make sure that you're buying it at a good valuation, you're buying it at a time where its earning cycle is positive and things like that. So those are good checkpoints. Does it have too much debt equity? Now, how many fundamentals should you check? Again, comes down to how well you understand the data points. But for the simplest thing, we have included the strike valuation setup. So when we look at the strike valuation setup, say, for example, you have been seeing banking stocks outperform since January. Now, if you actually look at a valuation setup of banks, just of Bank Nifty or any banking stock, let us even take, say, uh, Kotak Mahindra Bank, or we can even take financials, like one which I was tracking for quite some time was Shriram Finance. Okay, so if I look at Shriram Finance and I go to the strike valuation setup where we have both the momentum. Okay, so for strike valuation setup, I have to go to charts and I have to choose the bottom one, strike valuation setup. So you'll have both the RMI, the monthly RMI, and you can of course change the time frame to a weekly RMI also, along with the monthly valuation. Now, sometimes I like to switch from monthly to weekly, but we'll just look at it. So here we are looking at the valuation chart. Okay, and this is not taking a 1 year time frame, but I'm going to take maximum time frame. Okay, the reason I'm taking maximum time frame, you'll see once the chart comes up. Okay, one of the reasons to take maximum value, time frame is that notice what happened to the company historically. Okay, here it was doing very well in the past. 1 second. Yeah, here it was doing very well, then it went flat. Okay, it's not that it's not doing well, but as it's doing flat, possibly earnings continue to grow. So what ends up happening is earnings are continuing to grow, the valuation drops. The valuation, the midline here is the median. Okay, this is the average. So we have gone from positive 2 standard deviations on the valuation all the way to -1 standard deviation, and below here, even below that.
Yeah.
So these are points at which you would actually want to look at this buy signal, which is coming after valuations are very low, and this buy signal after valuations are very low. So these are very good buy signals on the monthly chart. So this is where it is useful to combine if you understand the valuation metric. Now, you won't find that everywhere, because in some stocks you might find valuations are still high. They may not necessarily be low, but if you scan enough charts, you might find stocks where valuations fell during this time period. So we are introducing a valuation scanner as well. Probably in a 1 month's time, you will get it where you can scan for all stocks which are at -1 or -2 standard deviations, and then you open their charts and do the study. But yeah, it's useful to look at both things.
सर ट्रेंड के अंदर आप देखो ना, ट्रेंड में इतना सारा अपग्रेड किया था 3 साल से, और अभी जो डाउनग्रेड हुआ ट्रेंड में, तो उसका आप वैल्यूएशन कैसे जज कर सकते हैं?
No, the valuation is data only. So we will end up looking at the chart. Okay. So अभी यहाँ पे देखिए आप valuation किधर है. At this point, recently, the valuation is up here, way above 2 standard deviations, right? So this was the 2 standard deviation line. It reached this line almost here, and then it crossed this. So now when I get this sell signal on the monthly chart,
अभी नया बाई सिग्नल आएगा तभी हम एंट्री करना है.
Naturally, but that buy signal also should come, hopefully, should come on a lower valuation.
Yeah.
Do I want to buy at this valuation is a separate question.
Yeah.
Valuation should be like here also it came down. This was a low valuation phase. Here it crossed the midpoint. Here, chalo, it's at least at midpoint. If you are buying over here on this buy signal, you are still at midpoint. Here you are way above. So you want this at least to come to midpoint or lower before you look at the next buy signal. Ideally.
Yeah. So we have to wait for the next buy.
Yeah.
So thank you very much. Excellent.
Yeah. Good evening, Rohit sir. Can you hear me?
Yeah. Good evening. Yes.
Thank you. Thank you for the session. Sir, just I want to ask you about not any stock specific RMI, as the Nifty defense has gone up. So can you please check on a weekly when it has come? Because I'm looking on a daily and weekly. I'm not looking at a intraday. So can you please?
For Nifty?
No, Nifty defense. Nifty defense.
The defense index.
Yeah.
Sure, it's showing here. I'm just checking whether the vendor has added it to the list, but I will still show it to you because we have it on trading.
Even you can check on oil and gas. Just I want to understand the concept that weekly when it has come, and after that it is daily it has come. Just I want to understand that concept.
Yeah, so now see, this is because it's a new index.
Yeah.
The weekly data is very limited. So the indicator has just started to plot on the weekly chart.
Okay.
Okay. On the daily chart, it has some plot, but we don't have any previous data. But yeah, this cycle is there. So this cycle is still in if you just look at this, it is in continuation because the buy signal was here. Now it is simply whipsawing.
Yeah.
So it is in continuation of trend with this support.
Okay. Okay. So in a say simple, I'm just thinking from my side. If I want to, because I want to write the whole trend. So in a weekly, I have to look at the some stock or something like that, and in a daily, I have to look at what are the new buys or has come. Just I want to track only that thing. Is this right?
That's right.
Yeah. Okay. Just I want to understand that. Thank you. Thank you, sir. Thank you.
I think these were the only questions, sir.
Okay. I see lots in the comments though, but yeah, I hope it's mostly covered.
We can take a few questions from the chat as well.
Yeah, see, someone's asked about stop loss. So I've given some ideas on stop loss, Lalitji, but yeah, you will have to do a full session on how to trail a stop loss, put a stop loss. But I've given ideas. If you're not able to get this, maybe if you can, watch the recording on Strike, then you will be able to actually figure it out. It's a very odd question. How to differentiate two positive crossovers on weekly chart as to which one is good to trade? I think I covered that, Amit, in a lot of detail as to which are the good crossovers and which are not, using the zero line perspective. So if you haven't, you didn't understand it, just watch the video again where I've explained it.
Sir, Ashok is asking, are defense stock in buy mode now or should we wait?
No, let's not. We don't want to give recommendations in this session. There's a question on, what is the basis of the indicator? See, it's something that I came up with more than 20 years ago. And it stayed that way because I was just looking for a smoother version. So it's multiple smoothing of, momentum. Now there are different ways to measure it. I've used a combination, but beyond that, we don't want to really divulge it in terms of the calculation at this point of time. But he's also asked about shorting of stocks. See, shorting is very similar to going long. So one thing I'll just share, that when you're using Strike, okay, I gave you the setup of, daily, weekly, or using that combination for buy. The same thing has to be done when you're actually looking for the short setup, which means that instead of choosing daily buy, what I'll end up choosing is, or a hourly. Let me remove the hourly. Let's go to weekly. So if I'm looking for positional shorts, I will say, okay, on the weekly, what is in sell mode? Okay. And on the daily chart, where am I getting a new sell signal? Now, this is exactly the opposite of what we were looking for. Now, note there are no signals here in the current bar. But when I do last candle, there was one. In Muthoot Finance, there was a new sell signal. Now, let us look at the chart. Is it a relevant sell signal or not? Now, guys, I'll just mention this since we are using scans and we are using some of the recent data. Note, this is all statistical. Unless you figured out your own entry, exit, capital required, etc., cash, future, what you're doing, don't take this as a recommendation. So you really need to have your own understanding to actually execute. The tools over here essentially meant to speed up your analysis process. It is just throwing up the idea. It's not telling you exactly what to do. And that's something that you have to figure out on your own. So we are really not making a recommendation based on this. It's taking a while to load. So here you see this crossover. So when I put it on last candle close, which means on the previous day, which is 15th, there was a bearish crossover. Okay, so that's all that has happened. We don't know where it will go. We don't know what is the risk reward. That's something that you have to figure out with additional tools. But that's the signaling is here. Now this is based on daily weekly combination. So if I go to a weekly chart, you'll see that in weekly it is in sell mode and the RMI is below zero. Now you may also find that on the weekly chart it has been trending up. So really, do you want to be shorting this closer to a support level, and or is this a bounce and then a bigger sell off? So those are views that you have to take, as to what it is really doing, and then only take action accordingly. But that's the kind of scanning you would do basically for, any sell setup is exactly the opposite of what we learned at the beginning on the buy setup. How soon are the charts updated? Hari, they are updated every minute, every hour, 5 minutes right now. Most of the screens have already moved to 1 minute real time. The RMI scanner probably has still not done so, but it will soon, and then you'll be able to see the changes happening on a minute-to-minute basis. Many of the watch lists and heat maps have already moved to minute-by-minute charts. So if you actually on the home screen, the charts when you open, they are updating every minute. These updates should be, all of the scanners and all should go into minute by minute by, we are anticipating somewhere in the second week of June. So the video, well, this is a live session, but we are recording it. We should ideally put it up on the Strike webinars list. I'm not sure if Chavan plans to put it up on the YouTube channel as well. If they do, it will show up there. Otherwise, it will be there under the webinar recordings of the Strike platform. So you can go and watch the webinars again there. There are already many uploads there, and you can watch this one as well.
I think, sir, that's about it. We have covered most of the questions.
Sure.
And yes, we'll be releasing this recording as a YouTube video as well. So we'll also share it in the community group once it's live. So thank you everyone for joining this session. Thank you, sir, for your valuable time. And hope so everybody found value in this session. If you have any other doubts, you can we'll roll out a feedback form and you can fill that up. And please try Strike tool as well. The feedback form is in the chat. So please everybody do fill the feedback form. And that's about it. Thank you everybody for your time and have a good weekend. Thank you, sir.
Thank you.